Hi again, it's Sierra, and in this section I'm going to be doing a financial analysis of the Hershey Company. I'm not going to go into detail about everything, but you can find it in the paper if you'd like. So to begin, I will talk about the preliminary indications of the Hershey Company. They have about 147 million shares outstanding, and as of March 31st, 2020, their earnings per share was $5.30. This is amongst the top in the industry, which is very attractive to stockholders. The Hershey Company does pay out quarterly dividends. Their most recent dividend was 77 cents. Once again, this is amongst the top in the industry, which is attractive to stockholders. Their stock price rose to record levels when it was traded at $161.40 on September 4th, 2019. However, the pandemic pushed the stock price to as low as $111.43 on March 23rd, 2020. The Hershey Company did see a few financial successes in 2019, and I thought the most impressive one was their acquisition of One Brands. It was a good strategic move, and it proved to be beneficial to their company. So all seemed to be well at the end of 2019, but there was a huge shift in the economy during the first quarter of 2020 due to the coronavirus. In a statement from CEO Michelle Buck, Hershey announced that it was withdrawing its financial outlook for 2020 and had warned of weak sales in certain categories as households worried about their financial futures cut spending on snacks and chocolate. There is a bit of concern about the company's liquidity, but I will get to that in a minute. Next, I'm going to highlight some key ideas from the industry ratio analysis that I found. In this chart, you can see that I have compared the Hershey Company's financial performance to their performance in recent years on the left, as well as the industry as a whole on the right. First, I looked at liquidity ratios, and as of December 31st, 2019, the Hershey Company had a current ratio and quick ratio of 1.05 and 0.53 respectively. Liquidity ratios indicate how well a company can pay back its short-term obligations with the current assets that they currently have. And looking at the industry average for both of these ratios, Hershey Company appears to rank lower than their average competitor. They do not have as much liquidity as their average competitor, and this is a cause for concern considering the current economic condition. Next, I looked at asset management ratios, including the inventory turnover ratio, accounts receivable turnover, and the asset turnover ratio. Hershey is on par with the industry average for the inventory turnover ratio. The company had an above average receivable turnover, which is good because it shows that they have an efficient way of extending credit as well as collecting it. There was a bit of increase in this due to the pandemic, which makes sense. And lastly, the Hershey Company did have an above average asset turnover ratio, which is good because it shows that they are using their assets efficiently to generate revenues. I then looked at the debt ratios, which measure the company's leverage. The ratios for Hershey in this section were quite alarming because they show that the company is exposed to more interest rate risk when using debt to finance its operations. I do talk about this more in a minute. The last category of ratios worth mentioning are the profitability ratios. The Hershey Company's return on asset and return on equity ratios were both well above the industry average, which is good. And this is good because the company is doing a good job of using assets to generate revenues. Like I said, the two ratios line up in that regard. And then the company is also handling its finances well overall, and that is indicated by the return on equity. The Hershey Company has a market cap of approximately $27 billion. The company has two classes of stock outstanding. There's common stock and there's Class B stock. Holders of common stock and Class B stock generally vote together with regard to class on matters submitted by stockholders, including the election of directors. Holders of common stock have 1 vote per share, and holders of Class B stock have 10 votes per share. With respect to dividend rights, holders of common stock are entitled to cash dividends 10% higher than those declared and paid to the Class B stock. The company's common stock is listed and traded principally on the New York Stock Exchange, and the Class B common stock is not publicly traded. On December 31st, 2019, there were 25,773 stockholders of record on their common stock and 6 stockholders of record on their Class B stocks. Hershey Company paid $608 and $10.3 million in cash dividends on their stocks in 2019. So the company's bond rating as of May 27, 2020 is A1 according to Moody's. This rating sits squarely in the middle of the investment grade category of their credit ranking system. This rating signifies that the bonds are of high quality and have many positive aspects, but do carry slightly higher degree of long-term investment risk. And this is mostly due to changing economic conditions, which that's what's going on right now. So this is why they're rated that way. This rating does also indicate that they have a strong capacity to meet their financial commitments, and these aspects are true for the Hershey Company. Given the current economic conditions, maybe not so much, but generally this is the case. The company has been affected greatly by the pandemic, and the convertible securities, I discussed those in detail in the paper. There aren't many and it's very limited, but I didn't feel the need to present it here. Also on May 27, 2020, the Hershey Company announced that it is offering to sell notes in a public offering. The company did this with intentions to use the net proceeds to repay a portion of the commercial paper it has issued, to pay fees and expenses related to the offering, and for general corporate purposes. In my industry analysis, I do talk a lot about the economy and the current conditions, so I'm only going to touch on it briefly here. And highlights from this section include some of the following. The Fed has cut interest rates and increased the money supply given the current state of the economy. The outlook is very uncertain at this time, and it has been for months, but CEO Michelle Buck has announced that the company has withdrawn its financial outlook for 2020 just because everything is kind of up in the air. The economy is entering a recession, and this could take a significant toll on the Hershey Company as well as many other industries and many other companies within the confectionery industry. Next up, I'm going to talk about the analysis of the Hershey Company as a whole in regard to their financial status. The increasingly diversified portfolio with high-growth snacking brands has helped the Hershey Company grow its profits in 2019. Acquisitions of One Brands, Amplified Foods, and Crave have also shown to increase profit margins. The Hershey Corporation maintains debt levels that they consider prudent based on their cash flow, interest coverage ratio, and percent of debt to capital. The company uses debt financing to lower their overall cost of capital, which increases the return on stockholders' equity. The company's total debt decreased in 2019 mainly due to the repayment of commercial paper borrowings used to fund the One Brands acquisition. The company is focused on ensuring that they efficiently allocate their resources to the areas with the highest potential for profitable growth. The company has maintained a high return on equity ratio for the past few years. This is difficult to do if the company does not have a good capital structure. The fact that this ratio has been consistently above the industry average shows that the Hershey Company does have an efficient capital structure. So I do personally think that the Hershey Company is in a good state financially. They will be hard hit by this pandemic, but I do think they will come out okay. CEO Michelle Buck did say in a press release that the company believes it has sufficient liquidity to satisfy its cash needs, as supported by access to bank lines of credit and an unsecured revolving credit facility. Several stores have had to shut down as a result of the pandemic, which has shown decreased sales in the first quarter of 2020. She also did indicate her worries about the liquidity ratios for Hershey, and she was concerned about their ability to pay back short-term obligations. Cash flows will be a concern in the current state of the economy, but hopefully we are not in this state for much longer and they can bounce back. So thank you for listening to my financial analysis. This was kind of just a brief overview, even though it's almost 10 minutes long. But there is more information and more explanation in the paper, and I look forward to hearing your feedback.